while some online bullion dealers continue to charge almost $2 over spot for 1 ounce silver rounds, SD Bullion is selling 1 ounce silver rounds at only 49 cents over spot on any quantity. Again, that's $9.99 fine silver for just 49 cents over spot for any quantity. If you haven't joined the over 40,000 precious metals investors by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
This is the Doc with the SD Weekly Metals and Markets Wrap. Joining us today is a good friend we're having back on the show, Sprott's John Embry. Mr. Embry, it's great to have you back on the show.
It's always great to chat with you, Dallas.
Well, John, we've seen a bit of correction here for gold and silver as we record here on Thursday morning. Gold is back above $12.50. It's trading actually right around $12.50 right now. Silver's trading up on the day after a couple of tough days. It's trading around $16.60 this morning. What's your take here, I guess, in the short-term trading action, the correction we've seen over the past month, and the little bit of a rally here short-term? What's your take on the recent trading in gold and silver?
Well, I think the correction was totally unwarranted. There was absolutely nothing in the news backdrop that justified gold dropping from just under $1,300 to under $12.50. And I mean, silver was even more brutalized. Given how inexpensive they are today, I honestly think that those that are sort of driving the paper market are becoming increasingly uncomfortable, and I suspect they may be trying to reverse their positions. So, no, I'm not the least bit discouraged by the price action recently. It's irritating, but not discouraging. And I think I've said on many occasions, I really believe that today, in relation to all other financial aspects, gold and silver have never been cheaper.
John, the thought comes to my mind when you mentioned that they may be trying to reverse their positions. Thinking back, probably it's been almost a decade ago, I remember Jim Sinclair stating that ultimately, in the very end, the people who make the most money in this bull market are going to be the banks, because they're going to be the ones massively long when everyone else isn't. Are we getting set up for that?
Well, you know, it's kind of funny because I've talked to a number of contacts, and they say that the sentiment amongst the average citizen now in the gold and silver space is absolutely as dismal as it's ever been.
Yeah, it's horrible.
And if that is in fact the case, well, that would facilitate the banks to reverse their positions and get in the correct position for what's coming in the future, which is, I believe, an explosive move in the price of both gold and silver.
Yeah, I feel the same way, John. And I mean, personally, just watching the setup over here over the last 6 months, I think we could be surprised as soon as this summer.
Well, I wouldn't, to me, everybody keeps talking about black swans and something that sort of has to really change the outlook. I just think the ongoing deterioration in the economy globally and sort of the financial stress it's creating is the backdrop for an explosive move in gold and silver. I mean, and you've seen people trying to get out of the system by virtue of what these cryptocurrencies have done. But the problem with gold and silver in the short run is you can short almost as much as you want, whereas the cryptocurrencies aren't subject to that. You've seen sort of their explosive performance, and I think that's just a precursor of what's coming for gold and silver.
Yeah, those who have just recently joined the crypto space had a eye-opening experience yesterday. I don't know if you saw it, John, but Ethereum flash crashed, I think, 96% in a couple of minutes.
Oh, yeah, I saw that. Yeah, so I mean, basically, the fact is that I'm not a knocker of cryptocurrencies, but on the other hand, the real money is gold and silver, and it will finally assert itself before this whole fiasco is over.
Yeah, and again, kind of my long-term perspective, gold and silver are insurance. Cryptocurrencies, I wouldn't classify that in the same insurance category.
Well, not at all. Not at all. I mean, it's something brand new, and basically people are captivated by it. And I think a lot of the buying has been driven out of Asia as they're trying to escape their currencies, clandestinely. And so it's created a boom. But at some point, that same mindset's going to come to rest on gold and silver. And given the massive short positions and what have you, I mean, the price impact could be make the increase in the cryptocurrencies look like nothing.
And let's talk a little bit about what supply looks like once that happens, because I mean, we've seen periods of physical tightness, especially in the silver market in North America. Most recently, second half of 2015, really it didn't totally ease up until mid-year last year of 2016. And we experienced physical tightness and anywhere from 6 to 10 week inventory delays across the whole wholesale market, with the retail public not even being involved whatsoever.
Well, you know, I think smart money, like big money, which I would call smart money, has been buying. Like, I have a good friend over in Europe, and he has a gold business, and he tells me that demand is robust from people with a lot of money that know what's going on. It's the little guy that's getting really hoodwinked here, because he basically looks at price action rather than fundamentals. And based on price action, you wouldn't buy it. But I believe that when the fundamentals reassert themselves, the price action is going to be so spectacular that all those that were left behind will be, you know, scrambling to get into it if they can even find any physical gold and silver.
Yeah, so I guess that's my question, John. What's the physical availability going to look like if it was so tough to come by a year ago, with the general public not even being involved in the buying spree? I mean, really, it was just the stacker community and those who were already purchasing gold and silver. I mean, it wasn't 20% of the public, 20% of financial assets trying to come into physical metals.
No, you're absolutely right. I don't think people have any idea of what can happen when the sentiment changes. I have the good fortune of having been following this sector since the early 70s. And I've seen, explosive sentiment hit the sector on several occasions. But nothing is going to approach what's coming in the future here, because when it becomes apparent that the financial system is in a meltdown, I think the demand for physical gold and silver will be so extreme that the vast majority of people won't be able to access any. It'll be too late, and the price will just, go sharply higher continuously.
So with all that said here, I know we were chatting before the show, John, that you think relative to the big picture, gold and silver are some of the cheapest they've ever been in history. And I tend to agree with that, and I'd actually point or single out silver in that due to the gold-silver ratio. What's your thoughts on the gold-silver ratio as gold and silver finally take off if we do have a financial system meltdown?
Well, I believe in tradition, and I mean, basically, when you get into a raging bull market for gold and silver, the gold-silver ratio collapses. And I see no problem that in this instance that maybe it'll fall by, from 72 to 1 or whatever it is as we speak, back to a more conventional 15 to 20 to 1. And if that's the case, I mean, the amount of money that's going to be made in silver is going to be staggering. I mean, my partner Eric Sprott and I, we love silver. And it's amazing how they've been able to control it. But as one of my friends says, it's like the cartel and the central bank's kryptonite. If silver explodes, then the whole theory that, there's no inflation and there's, that the financial system is fine will be destroyed. And so that's why they're working so hard to contain it. But boy, when it goes, I think the gold is going to collapse.
I agree with that, John. And I personally probably am a little less conservative than you. For those who aren't aware, right now the ratio coming out of the ground is actually a little bit under 9 to 1 of ounces of silver per ounce of gold. So it's only about 9 ounces of silver coming out of the ground for every ounce of gold.
That's absolutely right. And so when you put that in the context of 72 to 1 in price, it's preposterous. And there's another aspect to it, and that is that a significant proportion of the silver coming out of the ground is being utilized in really important industrial and medical demand, whereas gold is primarily hoarded, whereas silver wears two hats.
And it's not coming back out of that unless we see astronomically higher prices.
That's correct.
All those fraction of ounces of silver that's in your iPhone, that's in your tablet, that's in your laptop, that's in your high-tech TV, that's in every other electronic device. Is it recoverable? Sure, it is recoverable, but it's not economically recoverable with silver prices at 16 or 18 or 20 bucks an ounce.
Oh, no, not at all. I'm not worried about that. I think the other aspect is, I mean, as they call silver's poor man's gold, and right now the little investor, the more, the person who would accumulate silver, he's totally out of the market. I mean, people with lots of money will buy gold because just because it's you can get a lot more gold in terms of volume. Whereas if you bought a lot of silver, physical silver, I mean, storage becomes a small issue. But for the little guy, I mean, silver's his savior. He will buy when this thing finally breaks away from the control.
What do you think it's going to take for that to happen, John? I mean, is it something that is going to be a physical inventory problem on one of the exchanges like COMEX, a failure to deliver from the LBMA or COMEX, or is it going to be more something along the lines of a collapse in confidence of the Fed or the U.S. dollar, that the system loses confidence in the status quo and then turns to alternatives?
I think that the latter, for the simple reason that I think the central banks' days are numbered as sort of being able to control all the issues that are going on. Right now, they're controlling any market of importance, and they're making sure they're all elevated, because if they started to fall, I think they have the possibility of collapsing. And at the same time, to sort of assure people that everything's fine and there's nothing untoward going on, they're just really leaning into gold and silver. And this is they're good at it. I will never denigrate my opposition, because they're smart and they've got all the money in the world. But in the end, reality always wins out. And this time, because the reality is so bad and the gold and silver prices are so cheap, I think that's why it's one of the great opportunities in investment history.
Let's talk a little bit about the second half of 2017. What's your take on, for the first half of the year, gold and silver were hammered as the market was all gung-ho on Trump and his economic plan, but the market has started to realize that it doesn't look like anything of significance is likely to pass here in 2017. So I guess what's your take when we look at the political picture and the unlikelihood, in my opinion, that you're going to see any significant tax cuts in 2017, and the market kind of digesting that and how that might affect both the overall market and gold and silver?
Well, I think the government is constrained by financial, shortcomings. Like the basis is, the U.S. budget deficit is enormous. They understate it dramatically. The debt that's in place is huge. That's without even counting the unfunded liabilities. Corporations and consumers are back to record debt levels. This is a debt catastrophe. And as I like to say, anybody that owns a bond here should have his head examined, because they're not going to be money good. And the fact is, in gold and silver, I go back to the historic monetary role they play, it will reassert itself. And I don't think the U.S. government really has the capacity to do much because of what's gone before.
Yeah, they might like to cut taxes, but you have to come up with a little bit.
Yeah, but the last thing they need is a tax cut for the wealthy in the United States. One thing is that the propensity to consume of wealthy people is very low, because they got all the money, they can consume all they need. So it doesn't really benefit the economy. It just leads to more financial asset inflation because they buy more assets.
What other topics you want to shift towards discussing here, John?
Well, I'd like to just discuss maybe the direction of the world economy, because there's so much fake news on that subject. It is in infinitely worse shape than anybody will acknowledge. And I think the U.S. economy is in the early stages of a recession, and God knows how bad that can become. And when you've got stock markets on the moon and recessions sort of starting, I think there's all sorts of implications.
And what are your thoughts on the implications?
Well, I think that basically when there finally is a recognition that people like John Williams at Shadow Stats, they're right on the economy, not what's coming out of the U.S. government and out of mainstream media. And that suddenly when you realize that the economy isn't going to grow, and one of the reasons I'm a huge believer in Austrian economics, and when you get too much debt in a system, it takes more and more debt to get the same dollar of GDP growth. I think we've reached the breaking point where you can't get enough new debt, productive debt into the system to get any significant growth. And that's just talking about the Western world. I think you've got an unfolding catastrophe in China where I think their financial mess is epic. I mean, in certain ways, they make the West look prudent. So I think this is a global issue that the economies are going to disappoint and the debt's going to become more and more of a burden. And people are going to seek safety rather than these grossly overvalued stocks, bonds, and, real estate in certain markets.
One other thought I have, touching back to the cryptocurrency discussion, as the cryptocurrencies have made a pretty substantial move here in 2017, what's your take on the possibility that a lot of the money, the profits from that money, is booked and then placed into the metals? A lot of people that do own the cryptocurrencies are of a similar mindset of you and myself, that they're buying those because they don't trust the status quo. They don't trust the fiat currencies. I would have to think there'd be a lot of investors that, if you're sitting on a 10-fold, 50-fold, 100-fold gain, you're going to book a little bit of that and put that into physical metals.
Well, that's a really interesting thought, because they benefited from being clever enough to realize that the authorities couldn't control the cryptocurrencies like they can gold and silver. And as a result, the cryptocurrencies, by any reasonable measurement, a lot of them are very expensive today, and they're new, so people don't have total confidence in them. And sure, I think the reinvestment of some of your cryptocurrency profits in gold and silver as we speak would be brilliant strategy.
I guess my thought is it could change rather quickly. That right now I think the cryptocurrencies, at least in the North American space here, with sentiment so trophic for the metals, and also in Asia with money hot money fleeing into the crypto, trying to escape in China. I think that you're potentially looking at a situation that right now, for the moment, cryptocurrencies are diverting a little bit of money that might otherwise go into gold or silver. But at some point, that could flip on a dime and actually start pouring into gold and silver and adding to the demand to gold and silver. So it'll be interesting to see if that plays out and how that works.
I couldn't agree more. Like, I have a theory, and I've sort of had it for some time, that we were going to be increasingly frustrated as they've been able to control the prices of gold and silver. And by so doing, any middle ground is lost. Like, they're either going to be able to keep this lower longer than the rational mind can conceive. But when it changes, it will change so dramatically and so fast that if you're not there, the price gains and the availability will be, so different that people will be shocked if they don't understand the subject to the degree that you and I do.
I certainly agree with that. And I mean, you're watching it play out in sentiment. And again, it goes back to what Jim Sinclair said a decade ago. I mean, he pretty much predicted that to a T, that when the biggest move happens, the average Joe investor, the retail public, is not going to be involved.
Well, I've known Jim for a long time, and I have an enormous regard for him, and I totally agree with what he says.
All right, well, before we wrap the show up here, John, if you could give our listeners just kind of your thoughts over the next 6 months, kind of your outlook.
Well, I have actually believed for some time that the second half of 2017 was going to be the period when they finally lose control of their rigged markets and their, economies and what have you. And if, in fact, that proves to be correct, I think the change in sentiment and the change in price in gold and silver will be dramatic. And people that are invested in the wrong assets at that point, they may never recover. So I continue to encourage people to have a significant position in physical gold and silver. And I think there's a massive trade in the shares. I mean, it's a trade because there's all sorts of things that could go wrong eventually. Governments, punitive taxation, etc. But I think where the shares are today in relation to the price of gold and silver and the potential move in gold and silver being so great, I think the people will be shocked at the price movement in the good quality gold and silver shares initially, and then you may get into the junk after that. But the whole sector to me is the one area that I feel comfortable that I'm not going to lose any money in, and I can make a fortune. All
right, John, we always appreciate your insight, and it's always Always, always, always great to have you back in the show.
It's always my pleasure to chat with people that know the real story.
All right, so we'll wrap up this week's show there. So for the Doc and Sprot's John Embry, thanks for tuning into this week's SD Weekly Metals and Markets.